Meanwhile, a man who is an authority on the Indian IT industry, Infosys Chairman N.R. Narayanamurthy, expects the IT sector to grow between 15 to 20% this year.
NASSCOM itself has said, right, somewhere around 17% or something like that. I don't remember what they've said for this year. It should be okay because we are already at $50-60 billion, and for an industry like that to grow at 15 to 20% is a very good thing, frankly.
So still confident on the entire growth story there. Coming back to our top story tonight, growth in industrial production, that is factory output for the month of March beat even the most optimistic estimates, clocking in at 7.3%. But can such growth be sustained? That's the question we're asking. Joining us on the show tonight, Anish Chakravarty, Director at Deloitte, Haskins and Sells. Anish, thanks so much for being with us. First question is, should we really be looking at these numbers with such excitement? Markets didn't react to them today. There is a bit of a factor of the year ending as well. So, is this something to really get excited about?
I think it's a bit premature to really hold the 7.3% as a number which one should focus on a sustainable basis. I think overall economists would say that you need to focus on the overall trend, and that means looking at it over a period of time. If one focuses on some of the individual numbers which have come out, manufacturing, for example, has risen from 3.6% to about 7.9%. But the stark difference is capital goods, from a negative 18% to a positive 12.9%, and that is a huge jump. So the feeling one gets is the numbers are very volatile at this stage, and it needs to smoothen out over a period of time, maybe give it till June to see what really the impact is.
Right. To what extent do you feel we're already seeing the impact of the monetary policy right now, particularly in a space like manufacturing? We have been speaking to some corporate voices as well through the day, and even in the capital goods space, they are saying that you can't ignore the fact that there will be an impact of the successive rate hikes that we have seen.
Oh, absolutely. I think there are two things one should focus on. One is the base effect. The IP numbers around last year around this time were roughly about a 15%. Now that is expected to soften sometime I think around June. Also, we must recognize that the RBI has raised rates in March. The May rates, which has been quite proactive from the RBI's perspective, quite a bold move of about 50 basis points, no doubt is going to have an effect. So it is really a matter of time when one really needs to focus and say whether 7.9% is actually sustainable.
Right, I'd like to go back to the question that you raised earlier of volatility. Now, a huge swing from the February figures to the March figures. How do you explain this volatility? What is causing it?
Well, there is a lot of focus when people say that the 7.9% that we are, the 7.3% IIP numbers are really good numbers. But, if you look at it over a period of time, and let me take you back to April 2010, till about March 2011, and if we compute the average and focus on the use-based sectors, we will see that besides capital goods and consumer non-durable, all the other use-based sectors have been below average, right? And even if you look at the capital goods sector and consumer non-durable, these two sectors have particularly been quite volatile. So it raises a bigger question whether the 7.3% is actually a number which is a good number to focus on. We must also not forget that the RBI effect, the RBI intervention, that is no doubt going to have an effect going forward. So clearly, I am not too optimistic of looking at the 7.3% and saying with confidence that this is something which is going to be sustained over a period of time.
Right, but tell us one more thing. The fact, the landscape for fresh investment for the coming year, for this fiscal year, especially what Abha was referring to as well, after the higher cost of credit. How do you see the landscape for fresh investments in India?
I think it is also very difficult at this stage to predict that, and there are really certain constraints one needs to look at. There is no doubt that there is a capacity constraint on the supply side. Input prices are also quite high at this stage. Because of the RBI intervention, cost of borrowings are slowly going up. So increasingly getting funds into the market and to focus those funds onto the manufacturing sector is going to get very difficult, no doubt about that. So again, it comes back to the overall arching question whether the RBI intervention and whether the growth that one plans over a period of time really are focused on the same platform, or are they actually pulling at different directions.
All right, Anish, thanks so much for joining us and taking us
We'll have to
through those numbers in detail and giving us a sense really as to what's going on there. Well, with industrial growth